HIMS and hers buying opportunity or too hot to handle? The market loves a clean story. A company rises, investors cheer, analysts nod, and everything moves in one direction. But HIMS and hers has never been a clean story. It's messy, it's controversial, and right now it's crashing. Tonight we're breaking down why HIMS fell, the legal storm surrounding it, the accusations about knockoff drugs, and whether this is a buying opportunity or a fire you don't want to walk into. HIMS and hers didn't fall because the business collapsed. It fell because expectations got ahead of reality. For months, the stock ran on. Explosive revenue growth, viral marketing, celebrity partnerships, and the promise of telehealth at scale. But then the market asked a harder question. Can this company grow fast without crossing legal lines? And that's where the trouble started. HIMS is facing a wave of legal scrutiny, including investigations into prescribing practices, lawsuits claiming inadequate medical oversight, questions about whether online consultations meet regulatory standards. Telehealth is still a young industry. The rules aren't fully written, and HIMS is pushing right up against the edges of what's allowed. When regulators get nervous, investors get nervous, and the stock pays the price. One of the loudest accusations hitting HIMS is simple. Are they selling cheaper, compounded versions of brand-name drugs? Here's the truth. HIMS uses compounded medications. Compounding is legal, but heavily regulated. It's meant for patients who need alternatives, not mass-market distribution. Critics argue HIMS is blurring that line. Supporters say it's innovation, not imitation. This is the gray zone where the entire business model lives. And gray zones make Wall Street uncomfortable. But here's the twist. While the stock is falling, the company itself is still growing. Revenue rising, subscription base expanding, customer retention improving, new categories launching, brand recognition exploding. HIMS isn't shrinking, it's accelerating. The question isn't whether the business works, it's whether the regulatory risk overshadows the growth. This is where the story splits. The bull case. Massive addressable market, strong brand, subscription revenue, high margins, telehealth tailwinds, potential profitability ahead. If HIMS clears its legal issues, the stock could rebound hard. The bear case. Regulatory uncertainty, lawsuits piling up, compounding scrutiny, risk of forced business model changes, valuation still not cheap. If regulators tighten the rules, the entire model could get squeezed. HIMS and hers isn't a safe stock. It's not a quiet stock. It's not a stock you buy and forget. It's a company growing fast in a legal minefield, with a business model built on the edge of innovation and controversy. Is it a buying opportunity? Maybe. Is it too hot to handle? Maybe that too. This isn't a stock for the cautious. It's a stock for investors who understand that sometimes the biggest upside lies right next to the biggest risk, and HIMS is living right on that line.